Where, oh, where are the sellers? For years and years now, it felt like the stock market had changed. Anything positive was always met with a negative. Any bullish push by an analyst was quickly met by sellers who took advantage of the aggressive buyers to sell at a higher, better price. Not anymore, though. And you can see how it impacts the whole market. Dow advancing 171 points, S&P gaining 0.57%, and the NASDAQ effortlessly rising 7.5%, just effortlessly. It may be a long time since I've seen something like this. How about 24 years? 24 years when I've seen a moment where analyst recommendations have such a giant impact on stock prices. The impact, though, is not necessarily because people are persuaded by whatever the analyst had to say. We're seeing gigantic moves, frankly, on rather pedestrian recommendations. And those are all about big institutions either holding back from selling stock or, get this, my new thesis, the sellers simply are not being aggressive in trying to get out because maybe they just sold almost everything and have gone into high-yielding cash. There's no more stock to go. I mentioned 24 years ago because you have to go back to before the dot-com bubble to see such a big move on an analyst upgrade and price target bump. Those jumps occurred because money managers were reluctant to sell then, too. They sensed that every time someone says something good and says something constructive, a stock would attract new buyers. Why be aggressive on the sell side? And that's what's happening now. And it's augmented by companies that have spent years buying back their own shares and shrinking the supply of their stock in the process. The lack of IPOs also means we aren't getting crushed with new supply.
Don't miss a second of Mad Money. Follow @Jim Cramer on X. Have a question? Tweet Cramer. #MadMentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.